Vishal, good afternoon. You're watching Closing Trades on ET now. I'm Anisha Jain. With me is Aisha Faridi. And for now, the market is holding on to the green. So it's a decent start that we have had for ourselves for the week. But the Nifty has managed to hit 23,100 on an intraday basis, and the Sensex managed to mount that figure of 76,000. Though from there has been a bit of a profit booking, but nonetheless, 73,000 has been held very strongly for the markets, and Sensex too closing on as far as that 76,000 mark is concerned. However, the India VIX continues to spike as well. It saw a spike of 5% already, very close to that 23 mark. While in terms of the sector, it's public sector banks which are doing quite well. So whether it's an IOB, a central bank, a UCO bank, they're up anywhere between 5 to 10%. But the rest of the PSCs are actually dragging. So oil marketing companies, particularly on kind of the weakness that we have seen in crude, are on the declining trend. Interesting also to watch out for the trends in the broader markets, because after a long time we have seen mid-caps outperform the benchmark indices, because earlier in the last couple of weeks the small cap index was clearly underperforming the index, but today there's an outperformance from the broader markets. A lot of stocks which are buzzing around. Ashok Leyland, for instance, is up around 6-7%. That commentary from the management is something which has been liked by the street. A couple of upgrades also coming in. Finolex Cables is also sitting at life high levels. And ditto can be said for RVNL as well, which is trading at record high levels. Even though the stock is just up around 2%, the volumes on that counter are fairly strong. So overall, a very vibrant market if you're looking at the broader end of the market. Though from the frontline index is purely banking names. So your HDFC, ICICI, they are the big contributors today.
Yeah, absolutely. IndusInd Bank scaling higher by nearly 2.5% right now. Axis staging a move of nearly 2%. HDFC Bank, steady ship, another 1.5% after a phenomenal last week, and ICICI Bank as well going pretty strong by a good 1%. On one hand, of course, it's the banks, and then L&T as well, which has been one of the leaders of this rally, 1.25% higher for L&T too. And then pharmaceuticals all the way, be it Divi's, be it Glenmark, both of course earnings reaction. And for Glenmark, of course, it's the guidance which has gone well with the street, so which is why the stock gapped up and has managed to hold on to its gains. They're talking about EBITDA margins being close to about 19% for the full year, and that's something that the street has liked. Sun TV though, that's a bit of a disappointment. The numbers, yes, were muted, although brokerages are saying that, the House of Sale, say for instance, that they still maintain their outperformance. They've upped the target price now to 720. But I guess it's the IPL impact, or call it what you may. The stock down about 3.5% right now. Ashok Leyland, of course, the numbers have been very strong, as has been the management commentary, and that's reflective on the way the stock is currently moving, currently higher by 7.5%, no less, as we speak. Persistent, Jubilant Foodworks, Godrej Properties, these are some of the other star performers that we have in trade. But let's welcome on board our chartists and our fundamental experts and figure out what they're making of the market right now. Got Anshul Sehgal joining in on the show, Kunal Bothra on the technicals, as well as Vishal Malkan. Kunal, hi, afternoon. Let me start off with you. 23,100 now, led by banks and L&T combined. What do you see on the cards next?
I think it's an interesting day for the indices, because today I think it's purely again led by large cap names, and this time around it's more keenly towards the private sector banking names, as well as many of the PSU banking stocks which are showing signs of a continuation up move as well as a breakout for themselves. So I think this is a very interesting as well as a healthy sign. We are sustaining about the 23,000 mark for the index, and we are inching very close towards the life highs for the bank Nifty. So I believe that this could be a sign that the continuation or the rally would continue for both the indices, at least for a good part of this week. Now we could be looking at 22,800 as a fresh short-term base or a support for the index, and closer to 49,000 odd as a support for the bank Nifty.
Okay, clearly that's the verdict coming in. But Vishal, to your mind, which are the sectors which are showing the maximum amount of strength right now? Vishal?
The way things are going on, right? The two sectors which are doing well right now are the auto sectors and the metal sector. And auto specifically with Motherson Sumi, Ashok Leyland, and for metal sector, I look at Jindal Steel and VEDL. Those are the two sectors I look as the best performing right now.
Stocks within those pockets do you like or recommend, Vishal?
So I'll go with the Motherson Sumi, which has given a breakout above that 142 level and sustaining above that with high volumes and patterns also bullish on weekly as well as monthly charts. So I look at a buy with a stop of 139 for targets of 160 and 165.
Point taken. Let me bring on board Anshul also in the discussion. Anshul, what's your view on autos? Because when we did the CIO poll today, it was very interesting when I asked them about the overweight sectors. It was the sectors that the momentum is already into, which means PSU, industrials, defense, etc. And there was 0% vote that came in for FMCG and auto. Explain to me what could be the rationale for that, and would you concur with that view?
Hi, Anisha. It's a pleasure to be with you. You see, the reason for that is that capital is scarce. One has to deploy capital as a professional fund manager in the most optimal manner. And it's quite evident which sectors are going to do well in case the current dispensation comes back to power after 4th of July and 4th of June, that is, sorry. And clearly that segment of the market, which for the better part of the last decade was the laggard and which has only just started showing some signs of tailwinds, and where the markets expect tailwinds to actually catch pace going forward. It is that segment of the market that excites fund managers most at this time. And for the reason that they have scarce capital, they need to deploy it in most optimal opportunities. Autos, clearly, that is a space which has been interesting. There has been volume tailwinds in certain segments of autos over the last, say, 1 to 2 years, and that is likely to continue going forward. But the gap or the sort of significance of upside that remains in economy-related sectors, capital goods, manufacturing, also cyclicals in the form of financials, which are trading at far reasonable valuations as compared to autos today. I think that it will be investor interest which will sort of concentrate in those segments much more than autos going forward, particularly given the big event that we have on 4th of June.
Sure. Vishal, hi, afternoon. What is it sectorally that you're betting on right now? Where is the trend?
I think, as I said, auto sector is still in great momentum, and the next stock which I would like to go with is Ashok Leyland, which I know has already moved up 7% today. But I still think there's a lot of room on this stock with the stop of 218. I can look at targets of 245 to 250 in the next few trading weeks.
But what's the take on some of these big buzzers right now? On the gaining side, Godrej Properties is seeing a bit of a breakout. Of course, Pharma clearly has been in trend. Within Pharma, Kunal, what looks the strongest? Because Glenmark is doing quite well. There are other names as well from the Pharma pack like Divi's, etc., which have been on the higher side.
So Dr. Reddy is the weaker one. Divi's Lab is stronger. Glenmark Pharma, I think today is again given a price volume breakout, breaking past about that 1100 mark. And the likes of Lupin is also looking quite strong on the short-term charts. In fact, the stock has been holding up quite well over the last few weeks. There was a very minor bout of correction for Lupin when the stock had corrected back towards, I think, 1520, 1550 mark. But then the stock has managed to pick up decent pace for itself again. Sun Pharma is the only one from the larger cap names so far which is going through a big broad consolidation and no major signs in terms of volumes or in terms of indicators. And that's one of the major reasons why I would believe that the stock could go into a drag. From the mid-cap end of the pharma pack, I would look at Biocon because I strongly believe that the stock is also looking quite strong. 300 has been a major support for Biocon, and I believe that the stock could probably be at a cusp of a turnaround for itself on the long-term basis.
Okay, that's the take coming in pharma. Surprisingly, some of the select IT names as well are holding out well today. So look at an LTIM, for instance. Tech M as well is holding out well. HCL Technologies not looking all that bad. And then Persistent, of course, is the one which has shot up about a good 6% and holding on to its gains. Vishal, just wanted your take on some of these IT charts and whether they're trade-worthy right now, according to you.
I think IT stocks have gone through a bit of a consolidation in the last few months. And I look at HCL Tech as one of the best bets because it has made a base around that level, which is trading around 1350, 1400. And I think this could be a good bet for long term with very low risk around that 20 rupees and with a target of around 100 rupees plus on the upside from the current levels.
Point taken. Anshul, we're almost through with this earnings season, right? Anything that stood out for you which you've perhaps added in your buy list, or something which you've completely checked out of, didn't like the results in the commentary, etc.?
Anisha, this has been a very interesting result season, and I've been on a whole host of calls in this season. What is quite evident is two or three trends. One is that capital goods companies, manufacturing companies are giving commentary that there is significant strength ahead. Many of these companies are suggesting that in the next 3 years, they will double revenues. And this doubling of revenues is happening with volume growth. It is not just price growth that is leading to this sort of a uptick in revenues over the coming few years. So clearly, that space sees a lot of tailwind at this time. And this sector, because of the weakness over the last decade, has become a very small part of the markets in terms of market percentage, market capitalization percentage. I think that that is a space where there will be opportunity. I also have heard repeatedly in this result season that rural has bottomed out and the rural economy is seeing green shoots. Some companies have shown that in earnings growth, others have not yet shown that in earnings growth. But it's quite evident that commentary across the board has been positive on this space. So our assessment is that give it another 1 to 2 quarters, and the rural economy will start taking tailwinds going forward. Also, give if the current establishment comes back, their stated objective of doubling rural incomes by 2x, I mean, taking incomes by 2x, that will mean that the rural economy should do very well going forward. So that is a space which should do well. And then finally, if we look at financials, in the last decade, we saw financials which were retail oriented see their earnings move up, asset quality improve, and as a result, valuations move up as well. That trend has played out for the better part of last decade. Going forward, it is going to be corporate related lenders which will see tailwinds in our judgment. It is here that we are seeing significant volume uptick expectation in the next 4 to 5 years. And it isn't back ended, it is happening as we speak. And so PSU banks select housing finance companies, select NBFCs, they will see tailwinds in their earnings, and that will reflect in valuations in the coming few quarters and years. So these are three pockets where we find opportunity. And having listened to many calls, that opportunity seems to have been confirmed.
So hold on to that thought. We're going to take a very quick break with news that definitely we've given up that 23,100 level on the index to come off from the top of the day. But yeah, individual stocks continue to hold up. We'll discuss all of that and more on the other side.
Welcome back. Well, India VIX has seen a further spike. So it's a 7% move that we are staring at when it comes to the India VIX, even though the markets have come up quite sharply. So there's that inverse relation which is clearly playing out. So VIX towards the highest point of the trading session, while market has slipped below the mark of 23,000. Let's pull up the intraday chart of Nifty and see where we are getting the maximum amount of drag, because the banks are clearly doing its bit. It's Reliance which is coming under pressure. That stock is down 18 points. Rather, 18 points is what it's contributing to the downside. You also have ITC which has taken a bit of a knock. So there are those murmurs doing round that IIAS has asked the institutional investors to reject the proposal of demerger. That's the reason that stock is trending at the lowest point of trading session right now. NTPC, a bit of a disappointment on the earnings side. At best, a mixed set. Sun Pharma as well as Grasim, these are the stocks which are coming under pressure. Wanted to get a sense from you, Anshul, as to what the best tactical trade ahead of elections could be, because there's a part of the street which believes that we have made the top and perhaps there's going to be a lot of sideways move and profit booking at the end of the verdict come June 4th. What's your take as to what we should do ahead of elections?
Anisha, I've been a professional fund manager and now I'm an individual investor. Okay. And I can tell you, having been on both sides, that this market setup is highly skewed in favor of the individual investor. Why I say that is because if you look at the headline number on the markets, Markets will look expensive. Markets have also rallied a lot in the last 1 odd year, maybe since early last year, so say 1.5 years. And so fund managers are who are portfolio managers. They need to buy stocks to ensure that they give upsides yet maintain low volatility in their portfolios, which means that they will need to diversify a lot to ensure that something like that plays out. But this is not a market for diversification. This is a market which will remain narrow. There will be money making opportunities which will be stock specific, sector specific. And so to make a material difference to your portfolio, you will need to be concentrated in those segments. There will be many segments which will consolidate, as you rightly said, but there will be certain segments where there will be a lot of money made. Now, let me give you some instances. If you just listen to some cable manufacturers' calls in this quarter, the kind of body language that they're exhibiting, the kind of language that they're using for the opportunity ahead, I haven't seen that in a long time in the past. If you listen to some of the defense companies and the kind of detail they are giving in terms of the opportunity that exists for them in various segments of their markets, and how the export market is opening up for them, where government is really holding their hand and taking them to the export market, ensuring that they get that market. The opportunity is just tremendous. And while these stocks have rallied, but I don't think that we are at the fag end of this rally. We may be somewhere in the middle. If you look at certain financials, say some housing finance companies which have not done so well over the last 3-4 years, even longer, since maybe the ILFS crisis, and are now trading at half times book, there are stupendous sort of special situations available in that segment. So what I'm trying to say is that this is a market where if you concentrate your capital, there are tremendous money making opportunities. On the headline number, it may look like an expensive market. And then bear in mind that FIs have taken away monies from this market over the last 6 to 7 months. And they're down by about $4 billion, down to 11-year lows on their holdings of the Indian markets. If the current dispensation comes back, then there will be a mad rush to get back into the Indian market at whatever valuation. So I'm not a votary for taking monies off the table just now. I think the individual investor who's knowledgeable and can concentrate capital will be at a far advantageous position than a diversified portfolio manager in terms of absolute returns. Maybe not in terms of relative. I mean, for relative return reasons, some fund managers may like to diversify, but for absolute return, seekers, this is quite an interesting market.
And guess what? We've given up all of our gains and lying flat right now on the index. In fact, sub that 23K mark as well. But as we're nearing the conclusion of the elections, Sharad from our research desk joins in to analyze the market reaction over election years. Sharad?
Well, the mandate and the elections, that's a very interesting concept we have taken out. And for the last data from the last 40 years also, we have taken this data, and out of 10 times, 8 times there will be a positive return in a calendar year whenever there is elections held in India. Maximum returns we saw in the years 1991, where a lot of reforms was actually coming out in the markets, and that is why the impact was there. And overall, as a median return is expected, that would be 21% in an election year. Now let's understand over the last 12 elections, right from 1980, how the markets have fared. And of course, twice it has happened. It has turned negative also in the year 96 and 98. But overall, if you see, the trajectory is on an upward basis. Now, apart from the yearly numbers, we have a result day move. What was that reaction coming in? And of course, over the last 4 election dates we have taken in, and we can see on the screen itself, it has been on the positive side 3 out of 4 times. And on the May 23rd, 2019, it was on the downward side of almost 1%. 2024 so far has been very strong when it comes to Nifty. Nifty is up almost 6%. And also Nifty Bank itself, if you look at it, that has this year given investors return of almost 2%. Now let's bracket the performance which has happened between the UPA government as well as the NDA government, and we have taken last 4 elections, the UPA Part 1, UPA Part 2 from 2004 onwards. We saw 162% gains on Nifty, while it was 74% in the second term. Looking at NDA also, there was a Part 1 NDA 58% was there, and the last one, the current one, is coming in at almost 97%, or you could say almost 100% gains. So this has been the moves when it comes to the political parties. But now importantly, let's track the move 1 week prior and 1 week later for the markets. Of course, the volatility was there in 2004, both on the negative side, but largely on the positive side, if you look at it, especially 1 week later also, there has been strong up moves coming in when it comes to 2009, 2014, as well as 2019.
Okay, Sharad, interesting data out there. Thanks so much. So more often than not, the markets have rallied both post as well as pre-elections. Let's see which side it goes this time around. Pre-election, of course, we have seen a bit of a rally so far, but this week will it be about profit booking or continuation? We'll see. But for now, there is profit booking in the markets. Vishal, what's your view? This profit booking, should we make too much of it, or these are just sideways move?
I think every dip is like an opportunity to get into this position, this market. Till we don't close below 22,800, I think we are still in the up move. So every dip has to be taken as an opportunity. And also, as the earlier guest mentioned, that it's more of stock specific and sector specific. So that's where we should be focused on rather than 100-point Nifty going up and down.
Stock specific recommendations for now, top bets?
So as I already mentioned, Motherson, Sumi, Ashok Leyland were the couple of stocks which I mentioned earlier, but the couple of other stocks which are giving breakout in the last couple of trading sessions is REC and PFC, which have done great in 2023, and now they are again getting into new territory above those levels which were resistance in the last week. So REC for a target of 620 and PFC for a target of 560 are looking good for the next coming weeks.
Okay, Vishal, great to have you on the show. We'll let you go on that note. Thanks as always for taking the time out. Anshul, good speaking with you as well. Kunal, let's get in your closing ideas.
So I'll go with Axis Bank as a stock. Initiated a buy, I think, closer to 1135, 1140 mark. Now closer to 1200 levels. So it looks attractive. Would continue to have a hold stance on Axis Bank.
Okay, that's a hold on Axis Bank. Banks surely holding out, but the rest of the index is not. We'll analyze that after this very quick break. Back with the closing trades right here on ET now, and the closing trades have definitely cooled off a little bit. It's been ranged pretty much, though we've fallen nearly about 1% from the top of the day. 29.19 is where we're currently at in trade. Where is the pressure really coming in from? We've got Wipro, we've got NTPC, M&M, ITC. Reliance has now fallen to the day's lows, and I guess that's what's weighing heavy right now on the index. That's down a good 1% as we speak, pretty much mirroring the way the Nifty also has moved. So is the case with ITC too. But let me take it across to Ansh and find out what are the other volume buzzers in action today. Ansh?
Right, so Godrej Properties will be the first stock in focus, as the stock seems to have given a good breakout from its downward sloping channel where it was stuck for around 6 to 7 sessions. It has also surpassed about 20 DMA with volume of 1.6 times its average trading volume of last 10 sessions. Apart from this, persistent will also be in focus, as the stock has actually given a breakout from its cup and handle chart pattern where it was stuck for more than a month, touching 1 month high with volume of over 3 times its average volume of 10 sessions. Ashok Leyland is also in focus, as the stock has given a breakout from its 6 to 7 sessions of consolidation pattern with volume of over 3 times its average trading volume. In addition to that, the stock has also touched record high level today. Lastly, Glenmark Pharma will be in focus, as the stock has actually given a breakout from its rough reverse head and shoulder chart pattern, and it has also touched 8-year high. In addition to that, the breakout has been backed with volume of over 11 times its average volume of 10 sessions, showing strong participation in today's breakout. So these are the breakout stocks based on price volume action.
Okay, so those are the breakout stocks, but the market is clearly seeing a bit of a breakdown. 22,950 has been broken, so almost 150 points of the highest point of the day. We're off that bottom that we had made, so we have seen a V-shaped recovery, but whether we move on from here or continue to meander at that 22,950 is something to watch out for. But talking about those breakout stocks, Aditya Arora is also with us. Aditya, within the likes of Finelix Cables, Glenmark Pharma, Ashok Leyland, which chart is looking the strongest and you would recommend a buy at the current levels?
Very good afternoon. I think Glenmark Pharma looks good because money is moving from, money is actually chasing some of the defensive counters, and pharma counters really stand out in such a scenario. And the best performer today is Glenmark. So this outperformance may continue for some time. And I would also like to give a disclosure that I have personal position in this counter. So one must, cross-check before diving into a trade. I think Glenmark Pharma looks good at this price, so one can buy at 1114, and stop loss must be at 1070, and target would be 1150 to 1200.
Take coming in on Glenmark Pharma. Let's welcome on board Mahantesh Sabirad as well and find out what he's making of the market right now. Mahantesh, hi, afternoon. Let's just pick up on the point that our chartist as well was making on pharma. Good numbers from Divi's. Glenmark's guidance has been good. Seems like a revival in the pharma story is at play.
Actually, yes. You see the US economy is now stabilizing, and many of these Indian pharma companies have large exposure to the US market. We've had pressures coming from the US side for many of the pharma companies, particularly on the pricing front. That there was price compression, and even in terms of volume growth. Now that the US economy is stabilizing, we should be seeing many of these pharma companies now looking at better growth ahead. Not just that, Indian pharma industry has been evolving quite well. The growth rates are unlike the, let's say, the FMCG side kind of market growth. The pharma growth has been somewhere in the high single digits to early double digits in terms of growth rates. So that augurs really well for most of the pharma companies. So I would reckon that things are looking quite conducive for the pharma companies' growth ahead. Pricing should also be better.
The take on the pharma sector, but let me take it across to Shrishti. She's joining us with a roundup of how the performance has been, because more or less the commentary has been on the positive side, right, Shrishti?
Well, there's a lot of counters in the pharma space are buzzing on the back of the earnings. Let's start with Divi's Lab. Good set of numbers where we have seen after 5 consecutive quarters, the company has once again clawed back to the 30% margin, even above that in the quarter gone by. And not just that, the management is sounding very optimistic of the growth outlook ahead. For FY25, they are expecting a double-digit growth, as well as all the segments, especially the custom synthesis business is seeing a lot of traction is what they are saying. And even the Kakinada plant, which is expected to be operational in the third quarter of this financial year, is expected to come out with incremental revenue from that front. If we talk about Torrent Pharma, then definitely a good set of numbers, and on management commentary, they are expecting a margin to see an improvement of 50 to 100 basis points in FY25, and the margin increase to be aided by increase in the branded business, operating leverage, and some of the new product launches that the company is planning for the US markets. When it comes to Glenmark Pharma, then definitely a good set of numbers, but the EBITDA margin target is close to 19% for the full year of FY25. Other than that, the R&D cost for FY25 is expected to be 7 to 7.25% of the total revenue, and some of their key products are seen to be gaining market in their markets as well. If we talk about Aurobindo Pharma, then on the flip side, that stock is seen to be under pressure, because just ahead of the earnings, we have seen a good run up, but the earnings were not that bad. The operational set of numbers were quite okay. But if we talk about the management outlook, then they are expecting FY25 to be a muted year in terms of the growth, because they are saying that there are no blockbuster launches that are planned, and some of the blockbuster launches are planned in FY26 rather. And not just that, onto the OAI that has been received to the one of their key manufacturing sites, that is Eugia Manufacturing 3 plant, then the company is saying that more than 20 plus filings could get impacted because of that, but as a substitute, they will be substituting the upcoming filings to the Vizag plant. So those were the updates coming in from Aurobindo Pharma, and hence the stock is under pressure today.
Okay, that's the take coming in on all the buzzers from within the pharma pack. But just look at HDFC Bank. While, of course, the key pressure point today has been Reliance, but some of the private banking names are seeing a cool off, and I guess that is what's also weighing heavy on the index. ICICI Bank now meagerly holding out in the green. Kotak as well has drifted lower. And yes, HDFC Bank is the one which is drastically lower from its session highs. Kunal, let's get a reading on both ICICI Bank as well as HDFC Bank.
So I think HDFC Bank is interesting because the stock is inching towards a 200-day moving average breakout. This could be a big breakout for HDFC Bank because I think it's coming back after almost 5 months or 6 months of price correction. And I think if the stock sustains about this 200 DMA, which is I think 1540 approximately for the stock on the spot levels, we could be looking at a much more bigger uptrending move for HDFC Bank. So right now, in the last 2 months, what we've seen is a wave of short covering, mix of some built up of long positions, but the direction could probably be much more clearer on the upside once it sustains above the 200 DMA, which is at 1540 plus mark. ICICI Bank on the other hand has still been a stock which is underperforming. I think when you look at this relatively with the likes of Axis Bank, which has made a fresh swing high, SBI, which has also done pretty well. I believe ICICI Bank has somewhat been an underperformer. Even in the last, I think 45 minutes or so, the stock had corrected from 1150 to now 1120, 1125 approximately. So I would believe that the stock would probably take some bit of more time to break past about 1150 mark. But I think the key to watch out would be HDFC Bank if it closes above 1540 mark.
Okay, point taken. Mantesh, if you were given incremental money and the option to invest it only in HDFC Bank or Reliance, where would you put the money?
Incidentally, I hold both the stocks, but then at this juncture, if you want me to choose, Reliance would be the better option. More diversified as a business, more growth avenues for Reliance ahead. Telecom growing quite well. Retail is could bring in a surprise ahead, and Reliance is hungry for acquisitions as well. So unlike HDFC, who has now a muted growth ahead because there's a lot of competitive intensity building up. The management team, post the transition with the merger, is still not stabilized. So I would reckon it will take some time for HDFC Bank to really recover. But like my disclaimer is, I hold both the stocks.
Still holding both the stocks. That's the take coming in on from Mahantesh. Just looking at a couple of other buzzers as well. Sun TV definitely is drifting lower today. BHEL as well has eased off about 2.5%. Oro Pharma, like we were just flagging off, that stock as well is a little bit under pressure. A bunch of other names as well which have been in focus. Cochin Shipyard, of course, came out with its numbers. The revenues have shot up about almost 115 odd percent. The net profit is up 6.5 times. So that stock also has been making record highs today and it's been trading above all the key DMAs. Mantesh, do you believe some of these defense names could be getting a little frothy? Because, I mean, time and time again, we debate the same thing. But now the earnings, I guess, are also justifying the move.
I really don't know what valuation principles are behind some of these defense stocks. We do know that defense stocks have large orders to contend with, but that's the nature of the business. What is key for most of these companies is delivery at good profits. And we do know that defense companies and projects by the government that are allotted to defense companies are prone to delays, are prone to cost escalations. And you also have the cost structure within the company being changed primarily due to employee costs coming in and huge pension backlogs. All these things tell me that defense companies, from a really fundamental perspective, are too overvalued unless we have defense companies getting more and more orders outside, let's say, India, which certain defense companies are able to garner, let's say HAL, for example, to some extent, Cochin Shipyard and a few others. But if your order book is primarily going to be, linked to the Indian government's budgets, then it's going to be a little tough.
Right, okay. That's the take coming in on some of those, defense stocks. But Kunal, no abating on the charts, I guess. I mean, a Cochin Shipyard, for instance.
Yeah, I think these stocks have done exceptionally well and no retracement, no price correction for these stocks. You look at BEL, for example, and HAL, these stocks in the last 2 days have gone through a mild correction. But then when you look at the intensity of uptrend, I think HAL has moved from 4,200 to 5,000 plus mark. You've seen BEL moving, I think, from 235 to 40 levels, I think, last week or so, towards now on the verge of breaking past about 300 levels. So after such a steep rally of 25-30%, if these stocks remain in a range of 5% broadly, that would still be considered as a very healthy sign. for the entire sector as such, and even the likes of Cochin Shipyard, GRSE, Mazagon Dock, etc. I think these stocks have done pretty well for themselves over the last few weeks, and looking at the recent consolidation, this could actually be a good buying opportunity on dips for these names.
Okay, point taken. But just flagging out a couple of buzzers. Juniper Hotels after its earnings has actually seen a bit of an up move. Let's pull up that stock. Wasn't a very big, beat or anything, but the stock has been fairly volatile on account of that. And the other one which is coming under pressure in the last few minutes is actually Hindustan Zinc. What a stellar rally Hindustan Zinc has had this year. But today at least it's seeing some amount of profit booking. We'll discuss these stocks at greater length. But before that, let me take it across to Sharad to tell us what the latest cover is on Dalal Street. Sharad, take it away.
Well, yes, in focus is Phenolics cables, and what we are hearing from dealers is HNI buying is coming across several counters in this space, and the volumes also picked up right from the beginning of the trade. Interestingly, the dealers who are there in the wire industry, they also spoke to us and they stated that the telco cable related area is something which is showing a strong export related orders as well. Now, they are also expecting large orders to come from large conglomerates also, and today itself, interestingly, media reports suggested that Reliance arm would be providing telecom infra solutions in Ghana. Interestingly, 13% of the revenue for Phenolics cables comes from this segment itself, and also Reliance also gives a lot of orders in the telco segment to HFCL, where it has almost 5% stake, and also a board member is there in the seat. So overall, HNI buying coming across your cable related stocks today.
Okay, thanks so much for that, Sharad. But this hotels and hospital space, the two different sectors, but the affluent India is something which has been doing quite well. Within the hospitality segment, Mahantesh, do you think the trade is over? Because off late occupancies have drifted lower. Would you book out your profits?
Hospitality industry is very location specific. There are few competitive advantages for certain companies. So unless you have a company which is seeing large traction in terms of capacity expansion, large traction in terms of more properties being managed, it is very difficult to take a call on a company which has status quo in terms of overall properties being managed. But that said, one should remember that there is general buoyancy that we see when it comes to hospitality, tourism industries now reviving and thriving post-COVID. All said and done, many of the hospitality companies will therefore see better occupancies ahead. But I'm not too sure where the growth will come for many of these companies who don't have more property acquisition or expansions in place.
Okay, let's get in some BTST trades as well then, going on that note. Kunal, what's on your list?
So I'll go with two banking names. IndusInd Bank as a first stock, which I would suggest is a buy. The stock trading at 1460 approximately. Would look out for targets in the range of 1540. Stop loss could be kept at 1440 mark. And PNB is the other stock which is confirming a breakout on the very short-term charts, hourly time frame, specifically a triangular pattern for the stock above 128 mark. So would suggest a buy with a target of 140, stop loss at 125.
Right. Aditya, would you have any buy today, sell tomorrow ideas?
I do have swing trading ideas. I have camps on my list. That looks good. The stock is doing well after a long time, and there's scope for outperformance to continue. So camps is a buy at 3523, and stop loss would be 3400, and target would be 3700 to 23800. And second one on my list is HDFC AMC. AMC space is doing quite well, and the stock was up quite a bit, although we have seen profit booking in this counter along with the index, but still looks good at 3919, and stop loss is 3810, and target would be 4000 to 4100.
Okay, point taken. But Mantesh, coming back to our discussion on financials, public sector banks, do you see a scope of re-rating further for these names? Because they still continue to do quite well in the trading session today.
I think they have ample growth opportunities ahead. Remember that the worsening NPA cycle is kind of over for them. They have weathered the storm Some of the banks have, public sector banks have good capitalization, and they have good provision coverage ratios as well. Now, the only trigger ahead for growth for them would be how will the credit expand, or how will their book overall seem to grow. There is a bit of a problem on the deposit sides for most of them, but credit expansion should potentially happen given that there are a large number of corporate side hunger coming through the capex route, which will get absorbed through the PSU banking route itself. So I would be a little optimistic. Valuations have never been a challenge for most of these public sector banks. They have been beaten down below book values for quite a long time, and therefore now is the time for them to get their valuations right. So if that happens, we should see most of the public sector banks really doing well. So credit expansion aided by valuation multiple expansion should see the banks doing well ahead.
Just to put it in context, we were doing this exercise to get a sense whether the valuations are comfortable or not for the private banking names. And for most of the names, whether it's SBI, BOB, PNB, IOB, pick up any of the names, they are much higher than the 5-year average. For instance, for SBI, it's trading at 1.76 times price to book 1 year forward earnings, while 5-year average is 1.28 times. For smaller banks, the difference is quite stark. So, for instance, Canara Bank is trading at a valuation of 1.19 times, and the 5-year average has been 0.6 only. Even for BOI, it's now 0.78 versus 0.58, and even Indian Bank 1.21 versus 0.55. So a lot of these stocks have run up, and the valuation comfort is lacking. But this is a question we've been posting to a whole host of market experts as well. Let's listen into a slice of the conversation we had with Vikas Khemani earlier. He's talking about his top bets because, of course, he's depending a lot and betting a lot on Atmanirbhar Bharat, and that's one big fund that he's launched. But let's listen into his top overweight ideas.
And I do believe that we are in one of the best wealth creation cycle, and hence that should continue. Any continuity will only further that confidence. PSU banks is something we have been quite positive, and we continue to remain positive. But let's say for that example, oil and marketing company, we have not been at all buying because the governance is not fixed. It's a lot more political. So government interference keeps on happening every time price of oil goes up and down. So we basically prefer where there's a tailwind of the sector, when there's a least government policy interference is happening, is more run by the individual banks, individual organization, then the leadership of those organization has to be good. So I know we've been kind of approaching from that perspective. Pharma, of course, has come out of a very long cycle, and we think that there are many more years to go. So there's no need to kind of panic and kind of get out or continue to remain invested. Chemicals, we did quite contra buying in last 6-8 months when most of the markets were selling off. And we think that, there's a lot more promise ahead. So both these segments, we continue to remain bullish and positive.
Okay, that's the take coming in from Vikas Khemani on where he sees value and opportunity in this market right now. Affle, by the way, that's been the other star performer today. Came out with an excellent set of numbers. That stock, I think, has been sitting on a 4-month high, if I'm not mistaken. The intraday graph will just come off you on your screens. Eased off a little bit with the rest of the market, but at the high point, I think it was scaling higher by about 4% or so. So that's the other one which is looking smart indeed. Still continues to be good for Ashok Leyland. That's the other earnings reaction. Jubilant Foods is holding higher by about 7%. And these stocks haven't quite abated, much unlike the rest of the market. And REC as well is going strong by another 5% dash as we speak right now. Kunal, let's analyze some of these charts if you've taken a look. Ashok Leyland, REC or Affle for that matter.
Yeah, so I think all three of them are looking attractive. And I think specifically out of the three names, REC and Ashok Leyland are the ones which are very intriguing because these stocks have yet again confirmed a breakout for themselves. REC, PFC, both of these stocks, they had a gap resistance. I think, for example, REC closer to 555, 560 mark, where the stock had shown a gap, I think, in the start of the month of May, and then from there these stocks had corrected back towards 500 sub 500 mark. So it was a sharp 10-15% correction for REC from that gap which was formed, and those gaps have been filled, and this, I believe, is a very strong sign that we are now looking at a fresh wave of momentum coming back into the likes of REC and PFC. The likes of Ashok Leyland, I think, after yesterday's or rather Friday's price tick where the stock moved up to I think 218, 219 mark and then had gone down towards 210, 208 levels. Today the stock making a comeback again, breaking past about 225 mark. Again is an indication that the near-term trend is bullish for Ashok Leyland. The breakout which the stock had shown, I think closer to 185, 190 mark, almost a month and a half out back, that was a very strong breakout, and now we could be looking at that forming as a major base for Ashok Leyland over the medium term. So I believe intraday dips, corrections closer to 205, 210 mark should be taken as a good buying opportunity.
Okay, time for an ET Now exclusive then. And, in some relief for thermal power generating companies, CERC will be revising block bid size limit in a bid to ensure operational viability. My colleague Prakash is waiting by with more exclusive details on the same. Prakash, what is it that you're picking up from your sources?
Yes, an important development coming in. Rising power demand in the country as CERC has directed all power exchanges to allow a block bid size of 400 megawatt in the day-ahead market. A very significant development coming in, especially under given circumstances where power demand is constantly going up. We're given to understand that the CERC has revised block bid size to 400 megawatt from existing 100 megawatt, especially in a case of thermal power generating companies, to enable them to participate in the market. That will help government to ensure sufficient availability of power during current summer season. Remember, thermal power generating companies had approached Ministry of Power requesting them to increase block bid size from existing 100 megawatt to make their operation viable. Thermal power generating companies were of the opinion that they want at least 50% capacity from turndown level to make the operation viable. Subsequently, Ministry of Power had approached CERC in this regard. Now it has been decided to increase block bid size to 400 megawatt, a very significant development coming in. However, the maximum block bid size for sellers other than thermal generating companies and all buyers shall be 100 megawatt, and along with that the maximum number of block bids that the market participant can enter shall be restricted to 50. These all efforts are being made to ensure sufficient availability of power during current summer season, which has already crossed to 36 gigawatt during month of May so far, and expected to cross 250 gigawatt during current summer season.
Well, yes, thanks Prakash for that. Yes, power demand is surging and the government is taking all efforts to make sure that there is no demand-supply mismatch given the peak power demand hitting that 250 to 60 gigawatt mark this summer. But this is a question we've been posing to everyone. Mahantesh, wanted your view on that. What's the best tactical trade ahead of elections or amidst that?
No, it's very difficult to say, but if you notice, past 3 months, the market has been quite sideways between, if I look at Nifty, between 22,000 and 23,000, there was a little, a few points up and few points below that. But having said that, the best tactical play would be that you remain invested and look for opportunities if there is a sudden fall in the market, because the best buying opportunities always come in when there is an event that comes in and makes the market become very nervous. So you should be sitting with cash a little bit on the sidelines right now to help you take away these opportunities that will come, the event-based opportunity, the election event-based opportunity that will come. Even so, while you will continue to have your core portfolio, because what will happen is that if the event is favorable and the markets start rising, your core portfolio will continue to rise with them. And even if you invest with the cash that you have on the sidelines in a rising market, you should be seeing through in terms of your overall investment objective. So now you should be ready to deploy cash 5-10%, whatever comfort you have over the portfolio size, and await this event outcome which is linked to the election results.
Okay, Mahantesh, we'll let you go on that note. Aditya Kunal, we'll see you again with the trading action tomorrow. It's been quite a flip-flop of a session today. Yes, we made it to that 23,100 level, but then eased off from there. Minute bit of recovery, and that also got sold into. But net result, we're closing in absolutely flat, sub the 23K mark, both in the Nifty futures as well as the spot. It's really been private banks today, although they also eased off from the top of the day. But for a large chunk, IndusInd, Axis, HDFC Bank, ICICI Bank, they're the ones which really got that, gave that fillip to the index. Select technology names did not look all that bad. L&T, of course, has been holding out very smartly. And today you had Divi's as well, which was one of the top movers in the session. Reliance was a bit of a disappointment because while it did do all that magic and lifted the index up to that 23,100 mark, but then fell about almost 1%, closing in at the session lows. Similar was the case for Adani Enterprises, M&M, Maruti, Hero MotoCorp didn't have much of participation in there. Sun TV, Oro Pharma, Manappuram were some of the other laggards from within the broader end of the market. But on the flip side, we've been marking these stocks out. Ashok Leyland closes in with an 8% gain. Glenmark with a near about 8.5% move. Jubilant Foodworks, Persistent, REC have all held out very, very smartly indeed. Real estate, technology, autos, banks have really been the star performers today. Metals, oil and gas, infrastructure, power, even telecom for that matter, a much more sedate move coming in from these sectors. But let's see how tomorrow pans out. Today, of course, the broader market has done a lot better. We'll catch you with all the trading action tomorrow morning at 8 a.m.
If you like this video, then like, share and subscribe to ET Now.